Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently I was talking to a friend of mine and with regards to the stock market, we were talking about companies that are doing well and so on. And then he said, I wish there was some sort of a ETF that tracks the semiconductor companies. And that's when I thought, of course there is one that basically that you can find in the UK, in other European countries, as well as of course in the US. And for that reason I decided to do a quick video, just a quick summary of that ETF. I'm not going to go into much details, just talk about the more summary of the what the ETF is, where it's available, the Sharia compliance side of things, and the holdings, as well as of course making sure that we know the expense ratios and so on. And the ETF I'm going to talk about today is this one here, okay, SMH, or in the UK is slightly different, which I will talk about in a second. So this is the US version of the the ETF that we're going to talk about today. Now before we go any further, and some of you say to me, oh, it's not Sharia compliant, I just wanted to kind of share with you guys, I'm using Musafa just to kind of check this. There are others as well, which is basically Muslim Exchange, which is kind of newish, I think. I'm not basically sure how long it's been around, but it is also available to us. So alhamdulillah, we're getting a lot more from these apps. Hopefully that will help us make decisions with regards to investing in the stock market. But I just wanted to show you very quickly. As you can see, it says Halal. If we just look at the report, as you can see here, from business side of things, absolutely nothing to worry about just 2.5 when it comes to the Sharia compliant. Remember, they treat this entire ETF as a one single stock. So basically, instead of looking at each individual stock on its own, we're looking at the entire portfolio as a one single stock and applying to the Sharia compliant screening. Okay, when it comes to the interest bearing securities and assets, for example, it's just about 9%. Normally we're looking for anything that's higher than 33% or 30%, and the same goes for an interest bearing debt. So with regards to Sharia compliant side of things, absolutely nothing to worry about. And this one, what I like about this one is you got all four options here, whereas this one here, basically we've got the AAOIFI, basically the standards screening, whereas this one we've got the S&P, we've got the DJIM, we've got the FTSE one, we've got MSCI, we've got all of them. So this one here, absolutely fine, nothing to worry about. Every single one of them, it basically has a tick. So that's just to kind of show you before we move on. So what I'm going to do now is just talk about the main bits of this ETF, or the most important information that we're normally looking for. And the first thing we're going to look at is the expense ratio. Expense ratio is 0.35, and that is the same for the UK version as well. So the UK version, you can find it, is this one here, SMGB, if you have not come across. And the expense ratio is exactly the same. As you can see, ongoing charges is 0.35%. Okay. Now in the UK it's trading about £30, £31 more or less, and they basically have a market size of about 132 million when it comes to the overall. Whereas the US version is slightly different. So asset under management is $22.37 billion. So there's a lot more volume, I guess, a lot more money invested in that one. Now both ETF have the same holdings. So if we look at Seeking Alpha and you scroll down, you can see top 10 holdings here. Nvidia, of course, is the top one here. We got about almost to 21.5%, 21.4%. Then we've got Taiwan Semiconductors, about 14%. We've got Broadcom, that is 8.9%, almost 9%. And then we got AMD, about 5%. Texas Instrument, another 5%, 4% for ASML. Analog Devices, about 4%. Applied Material, Qualcomm. Every single one of these companies on top here is Sharia compliant right now. And as you can see here, 75% of these holdings comes from that top 10. But I don't like the fact that Nvidia has grown to this sort of a number, but I think it's a lot to do with the fact that they haven't maybe rebalanced it recently and it's gone up so much. Of course, as we know, that's probably the reason why. But yeah, the 20, almost the 22% comes from Nvidia, and 75% is basically the top holdings now. That's, and the whole ETF has about 25 or 26. I think it's 25, but 26 is probably includes the cash they hold as well. Now, looking at the ratings for this ETF through Seeking Alpha, what you will see here is actually they've been recommending as a buy or strong buy for quite some time. And remember, this is just a different month, so basically same month but different days. So for quite some time they have been recommended, which is very interesting. And when it comes to performance, I'm going to share with you guys in a second. You'll be surprised the difference between this one here and this one here. I was very surprised to see, although they hold the same more or less, if we look at here, for example, okay, although this says 13%, I'm not sure what's going on with that one. 10% here, 10%, 10%. Okay, the overall, like when we look at the performance of the two ETFs, okay, so this one here is the SMH, and this is the UK version of it. As you can see, that's in pounds, that's in dollars, and then you got the S&P 500. Now, a year to date, this one is up 40%, whereas this one is only up about 21%. So it's very interesting that this has outperformed, doubled the basically the return in basically in total in comparison to this one. I'm not sure where that's coming from. The only answer that I had to this is if this is actually true. This is coming from, by the way, Hargreaves and Lansdowne, and if this is the weighting, maybe because Nvidia was weighted more and has done absolutely amazing job, especially these two over the last whatever years, whereas this one is very much balanced, whereas this one here, okay, if we look at the holdings, we got Nvidia 21%. But whatever the case is, it's very weird that the fact that this one is actually, if someone has got an answer, I'm just looking at this with fresh eyes. So if you've done your research and you own it, and I know a lot of the brothers, mashallah, they actually own this one here, the UK version of the stock. Okay, a lot of the brothers own this one instead of buying the individual stocks, and I really agree with a lot of them, because you'd rather own this ETF than actually own individual stocks. And the reason I say that is because of the risk involved. Okay, right now, if you bought this ETF, your money will be diversified between all of these ETFs, okay, plus the another 15 stocks that we can't see on this list, right? I'll share that with you guys in a second. Whereas if something happens to Broadcom tonight, I'm losing over £6,000 completely out of the picture. ASML, if exactly the same thing happens, and the other one that I own in this portfolio is Qualcomm. So if anything happens to basically Qualcomm tonight, I'm losing that almost to £4,000. Whereas if something happens Qualcomm, I'm on this ETF, I'm actually just losing about that 3-4%. Okay, so and that is the bit that you really need to think about. In generally, you're better off basically having this ETF than actually buying individual stocks, unless you can do your research, you actually know these companies, you're going to look, you understand how to analyze the stock and basically read their earnings reports and make sure that the forecast, it looks good, and all of the things that I do on a regular basis. If you're not going to do that and you don't have the time, you're better off owning the ETF. Because right now I'm happy to look at Broadcom's earnings, which I did recently. Okay, same goes for Qualcomm, same goes for ASML and any other company that I own, and just come to conclusions. But I really like the fact that this ETF does exist, and it exists in the UK, and it exists in a lot of the European countries. I was actually just on their website, if I can find it, and as you can see here, they've got different versions of the same ETF. And if you go to the top, so that is basically the original, and then you can actually see there's a UK version of that, okay, which is basically this one here that we were just looking at now. And then you've got other basically ones as well in different countries. So it does exist in the other European countries. If I click holdings, for example, this is the bit I wanted to show you. So right now, I think the European version of it, the Nvidia and these companies are very well balanced, whereas this one is the US version. Okay, and that is probably the one that has Nvidia on a higher basically percentage, if you like. So looking at this one here, as you can see, is very much balanced, which is quite nice. And maybe that's the reason why it underperformed almost half of the performance of the original ETF. But nevertheless, still great ETF. I really like the fact that you making what 20% return since a year to date. There's not that many companies in my portfolio that have done that since the beginning of the year, apart from the semis. So 21%. Okay, it's absolutely amazing. And now if we look at the last year, 1 year, 40%, whereas this one about 62%, and the S&P 500 is only 27%. Now the last 5 years, I'm not sure how long this ETF has been around, but if you bought 5 years ago and you just basically buy the ETF as you go along, you probably would be over now, basically up about over 106%, which is absolutely wonderful to see. But you basically, this one is definitely outperforming you, so that's almost a 300% in comparison to 100%. However, they're still doing absolutely amazing job. Okay, and I really like that. I really like that. So just to use this as a benchmark for now, if I show you a couple of things, I want to compare this with the S&P 500 with based on the total returns. And now the reason I want to use this one is just to basically seek an alpha that doesn't have the other one. So I just wanted to show you the performance of this one here. Okay, if you're in the US, absolutely fine. If you're in the UK, I'll see if what I can do. But for now, total return is we're looking at it for this 1 year, 58%. Let's look at the last 10 years and compare. 931% in comparison to about 200. Now total returns includes dividends, and remember this one does pay dividends. The UK version is accumulated. This one basically gives you the dividends, so that $1 basically is what you will get annually. I think it's annualized. There we go. Annual payout, for example, that's $1, and whereas the other one is accumulating, so you can't actually take that money. Okay, they reinvest it for you. And now looking at the UK version or the European version of this, okay, so the one I was just showing you now is, as you can see here, we've got the performance history. Okay, we've got the actual ETF and then basically what it tracks. And as you can see here, for the last basically 3 years, so we've got 1 year return of 64% and 18% for the last 3 years. So I think they've started maybe about 5 years ago. I want to find out exactly when this is started. There you go, 2020, the 1st December 2020 is when it started. So it hasn't been around for quite some time. The expense ratio, I've already shown you that. They rebalance the semi-annually, which is absolutely fine. And then any dividends that you receive will be reinvested because this one is accumulating, like I said earlier. And as you can see, this is the breakdown. So I'm assuming basically what's happening is the UK or the European version is slightly different weightings, which is nicer. I prefer this because this seems very much balanced than the actual US version. But the thing is, when Nvidia it goes to the moon, whatever, with that basically 20% on the other one, so that's probably why it's actually outperforming so much. And in terms of countries, it's slightly diversified. So majority of the companies come from, of course, US. We got Netherlands, which is about 11%. I'm assuming that's ASML and so on. We got Taiwan, Semi, Bermuda. I'm not sure which company that is. We got Switzerland, and we got Layback Cash sitting there as well. So that's what I wanted to share with you guys. It's just basically just to let you know this is a Sharia compliant. It is available to people in the UK. So if you wanted to buy the UK version of this, you can type SMGB, and this is the one. Okay, and you can just basically buy this weekly if that's something you want to do and hold it for a very long time. I'm not saying go away and do that. Okay, whereas the other one, okay, SMH, okay, this one here, the US version, in fact, that's the okay. So there's UK version of it, and then accumulating as well. And then of course you've got the European ones in euros, and then you've got the US version of it as well. The US version of course it does not exist here. That's the one that pays you the dividends. The rest of them, that's why it says distributing that. Okay, whereas the other two actually do not say that. So this one, and if you live in Europe, you can buy this one, and that dividends will be reinvested for you. And if you live in the UK, you can just buy this one and it will be the same. Whereas I would rather buy this instead of buying the basically the European version is because all the pound, the dollar one, because in the end of the day I don't want to pay that FX and the fact that it's UK. I'd rather own the UK version basically. So there you have it. That's the what I want to share with you guys. It's just I was just talking to him the other day and I thought, you know what, let me just go over very quickly, and I was literally looking basically trying to figure out which one will be the better version. But at the same time, it looks like, why would you want to invest in the US version of the stock when you have the UK version of it? Even though this basically the returns are massive in terms of the basic returns is huge difference, but when we look at just the year to date is double that. But overall, I don't think that matters. So if you're a long-term investor, you're better off owning this. And it is very cyclical, by the way. If we look at the maximum, for example, you can see, and I'm talking about just generally both of them. Okay, so this one, the bottom one here, and this one, both of them are exactly the same. They are very cyclical. Basically, the semis are very cyclical. Okay. So yeah, that's what I wanted to share with you guys. I hope that makes sense. I hope you have at least an idea now. There's another ETF that exists out there. Go away and do your research. There are different versions, of course, but just make sure you know which one you're invested in. InshaAllah, the expense ratio isn't as bad as what is out there, and the fact that they will reinvest that dividend for you. There's a lot of benefits. So what would I do? If I would basically, for me moving forward, I really I'm happy with what I own right now in terms of these three companies. If I ever have the urge to, or the semis come back down maybe quite a lot, then maybe instead of owning the individual stocks, I'll leave my individual stocks because I do like them. I'll probably start buying the UK version of the ETF and hold on to it for maybe a very long time, inshallah. Anyway, have a wonderful day. Assalamu Alaikum.